let's talk about current market conditions. So let's look at, first let's look at the stock forecast toolbox. So this is our flagship product. This is a model that's optimized for making prediction for short-term and long-term. So now we're looking at the 10-day predictions. And currently, bulls are in control. Model shows that positive trend. We came close or retested the all-time high, currently trading at 301.49, and predicted range today at 300 and 302. So I think as long as the market is trading above 50-day moving average, bulls are in control. The model does show positive trend, potentially breaking the 302 level. I would personally wait for the confirmation to make sure that we actually have a breakout of a 302, 304 level on above average volume. But the model doesn't see events, right? We have FOMC meeting, we had ECB meeting yesterday. So we know about interest rates in Europe. We had de-escalation in terms of tariffs between the United States and China. United States postponed their additional tariffs until October 15th. China is encouraging their companies to buy agricultural products and not put additional tariffs on these agricultural products. So definitely de-escalation of tariffs. The news will probably come out, I think it's scheduled for middle of October. So between now and October 15th, there is still a lot of uncertainty in the market. And as long as there is uncertainty on the market, I don't think the market will break 302 level. But again, very important just to see and wait for the confirmation above average volume to see if there's a breakout above 302. Now looking at the seasonal chart, model posted prediction at 6 p.m. Central. 3 out of 4 predictions are higher, showing a strong momentum, support at 285, overhead resistance at 303. Still, model sees a pretty wide possible range that the market can trade. And this week it was spot on, showing that if 3 out of 4 predictions are higher, then you look at the accuracy of the signal, about 80% accuracy. And we actually are very close to the all-time high around 303 level. Let's look at some of the other indices. We already said that spiders, for all practical purposes, are at all-time high at around 302, 303 level. Support is at 50-day moving average. I think as long as the market is staying above 50-day moving average, it's already done that for 7-8 sessions. Bulls are in control. Major event is FOMC decision next week, so that will provide probably additional volatility in the market. Looking at the treasuries, they are selling off below 50-day moving average, so that's a win for the bulls. So as long as the treasuries are selling off, that opens up a door for the bulls to continue being in control. So treasury, we looked at the gold. Angelique, thank you. Good morning. Gold miners. Slightly down, below 50-day moving average. Again, positive formation for the bulls. So gold is selling off, treasury is selling off. Let's see what else we have. Gold is above 50-day moving average, so it didn't break this support. Gold miners did. I would also look at XLU. So looking at the consumer safety asset classes, XLU is close to all-time high, so we don't see a lot of sector rotation out of the defensive names. That would probably be better for the bulls, right? If people would move out of the XLU and into consumer discretionary. So utilities are all-time high, consumer discretionary all-time high, and real estate Vanguard fund all-time high. So a lot of people are talking about vector rotation into value, from growth into value. We've seen Visa selling off this week, kind of staying below 50-day moving average. Microsoft, I think, recovered for the most part, but still traded below 50-day moving average, kind of today trading right at the 50-day moving average. So there's some sector rotation from the high growth names like Microsoft. Costco was leading the market. So a lot of people are taking profits, right? People are taking profits and rotating into more of sectors that have been underperforming, such as financial sector. Treasuries are selling off, yields is higher. Treasury banks are approaching all-time high. We had a nice recovery from 26 to 28 in XLF. Same thing with the Russell 2000. Russell 2000 again went from 145 to 159, about 10% move. About 10% move in the past couple of weeks, and again we're approaching this, overhead resistance January, May, and July, which we were unable to break out from. So those are the indexes and my view on the market. I would also look alternative harvest. Marijuana stocks have been underperforming the market. Briefly touched December lows, bouncing off of December lows. So it looks like it found support around that level, and I would also look at the VIX volatility. Volatility is close to the support, so definitely complacency is back in the market. This is the time where, if you do have exposure to the market, if you're a bull and your exposure to the market, this is probably a good time to hedge. Right? You don't want to hedge your portfolio when VIX is at 25, 22 level. The appropriate time would be to hedge your portfolio with VIX calls or spiders put spreads, or when you see some support around, which we're currently right at that support level.